Today is Monday, 4th of March 2024. The bull run is officially here. Bitcoin crossed $66,000 today, and Nvidia is now more valued than Saudi Aramco, the biggest oil company in the world. My name is Nnanna, and I'm your guest host today on a couple of things. Warren Buffett is 93 years old. He's worth $134 billion. He was numerous times the richest man in the world, and he has committed to giving away the entirety of his wealth to charity. He bought his first stock when he was 11. He became a millionaire at 30 and a billionaire at 56. In essence, 133.7 billion of his entire wealth was accumulated after his 50th birthday, despite being a millionaire already in the year 1962. Why do I share this? Because my favorite writer of all time talks about how incentives in finance influence what we spend our money on, how we save, and what we invest in. I started my career selling structured financial services products, loans, investments, and advice to big companies and high net worth individuals. In theory, that meant studying market trends and offering the customers the best possible option and advice to maximize their wealth. In reality, it was bundling a bunch of these products together just so we could earn the best possible mix of fees and also grow our assets under management. That was the incentive on which my financial services advice was hinged on. The best possible financial and investment advice most people will ever receive in their life is literally just two words: do nothing. If you're feeling generous, you can expand it to do what you've always been doing. But that sounds boring, sounds somehow. And to be honest, if your highly paid financial advisor says that to you, that's probably the last time you're going to speak to them. That's why we spend all our time elevating and listening to semi-intelligent hacks who spend all the time on TV and the internet trying to show us the next assets to buy or sell. These people are paid to promote these assets and get you to execute on their promotions. Chances are their personal portfolios are the inverse of what they promote to you in the media. A few years ago, I was privileged to come across a few people who had gotten significant windfalls from their places of employment, their businesses, and COVID-19 stimulus checks. And they were looking for where to deploy these huge sums of money to. My advice to them at the time was to lock up some of the money in an index fund or a high yield savings account, go on holiday, and when you come back, you decide if you want to keep doing what you're doing, which was my primary advice, or make research and decide what's the next thing you're going to do with your life. Many of them didn't take this advice and decided to become angel investors, investing in quite a few companies that came around during the time. Full disclosure, I also did the same thing and angel invested in a few companies. Today, many of these investments are underwater. The only ones who seem to have come out of this experience on high are the investment vehicles who charged us fees during the time. Another bull run is here, and people are going to start wondering where they are going to deploy capital to take position with assets that will yield maximum return for them. I wanted to use this opportunity to share a few truths to people wondering along these lines. Firstly, if you've not been investing and losing money out of habits over the last couple of years in the crypto and stock markets, then I beg you to not start now. Starting now is akin to developing a drug habit. You are definitely going to get burned if you start today because you're most likely not going to be informed on how and where to do this, and you're going to be making impulsive and irrational decisions as a result. Just periodically lock up funds in an index fund or something and go and sleep. You're already doing a good enough job as it is. So double down on your day job or the business that pays you. The fact that you are asking this question and you are looking to allocate a percentage of your existing incomes to take advantage of this at this point means that you're doing a good thing. So just keep doing what you're doing and let the rest handle itself. And for you, my friends who are addicted to magic internet monies, consistency is key. You've probably been losing and winning, but you've not retired. That's the truth. The chances are one single coin and asset will not retire you. The chances of that happening are very, very slim. You're more likely to go broke chasing the next big thing and deviating from your habit and routine at this time. The fact that you've not gone broke yet is a miracle. So just, again, keep doing what you're doing. Keep allocating, keep researching, keep learning. I don't know the next coin that will make somebody a millionaire, a billionaire. If I did, I wouldn't be on this call. So just keep doing what you're doing. Don't change a system that works. Remember, rug pulls and scams are at the gates. Please stay safe. And maybe, just maybe, we're all going to eventually make it. Thank you.
Hi, Lade here. This was episode 63, and this was my first guest on the podcast, and no one else but my husband. Woo! If you would also like to be featured on the podcast, if you have something to talk about, something on your mind, and you can talk about it in less than 10 minutes, send it to me. Maybe we'll put you on too. Okay, bye. Thank you for joining me on today's episode of A Couple of Things. If you enjoyed this episode or found any part of it insightful, don't forget to share with your friends on your social media, and be sure to leave a comment or a review if you can on your podcast listening app. Thank you.